Yeah, hi there, Eric. How are you doing?
All good, all good.
Cool.
Thank you for joining.
My pleasure.
All right, so thank you all for joining today's session with Jack from Native Teams. Very excited to have this opportunity live on SeedBlink in the coming few weeks. Jack and the team have been nothing but open and excited towards this collaborations, and it's our pleasure. I think it's not very often that we have a company that is doing more than 10 million, north of 10 million ARR on SeedBlink. So with that in mind, I'll give the floor to Jack to do a quick intro of himself, and then to quickly go through the pitch of Native Teams and where the company is and where they're going. And in the second part of today's meeting, we can also go through questions and answers from the audience.
Cool. Sounds great, Eric. Thank you very much, Steve. Absolute pleasure to be here, and thank you for setting up the call and the sessions. A brief intro to me. I've been working in the tech sector for, I guess, around 15 years now. The years kind of pass way too quickly, so unfortunately, but it's the kind of the pleasure of my career to be where we are now with Native Teams. I founded the business back in May 2020, but really, I think plowing into that, the fruits of the previous 10 years of experience into that business. British, based in the UK a small portion of the time, and then the rest of the time across our offices in Southeast Europe. We have offices in Serbia, Macedonia, Croatia, and Albania within the kind of the wider regions. Oh, actually, just a new one we've opened in Sofia as well.
All right, thank you, Zach. So can you tell us a bit, what's the garage story of Native Teams, and where did the company, how did it start?
Yeah, no, it's a lovely question, Eric. And when you kind of pitch it as the garage story, it is pretty much the perfect garage story, to be honest with you, because we founded Native Teams to fix an issue we had ourselves. So I ran a startup actually in the region as well, 2008 to 2013. After I exited that, it's a bit of a case of figuring out, well, what to do next, and didn't really know the answer straight away. But I did know tech, and I did know development and kind of how to build a business. So I created a small software development agency building software for other people. I think there's about 15 or so of us as employees. Me in the UK, a couple of colleagues in Macedonia, a couple in Serbia, one in Slovenia, and we had clients in US, UK, and Australia. And even within that small business, we had issues making sure that everyone was paid compliantly and was getting the most value from the work that they were doing. So we can only find a way to make sure that people actually got the money in their pockets, but to make sure they were getting it in such a way that perhaps gave them access to the creditworthiness they needed from the banks, or I guess accessing some of those kind of state benefits and sort of making sure they were being paid compliant. It was a real struggle. So we worked to kind of figure out, well, how do we solve this issue for ourselves? We had a client, a colleague that had to leave us because he wanted to get a mortgage. He couldn't because he didn't have a proper local employment contract. So fundamentally, we needed to fix that for ourselves, which I guess perhaps some of the best businesses, hopefully, and certainly some of the best reasons for starting a business come out of, well, this is an issue that we've got. How do we fix it? So fix it for ourselves. And then I had a friend that runs a sort of similar size actually business to ours, based in Dublin. He had a couple of software developers in Belgrade, and was wondering, well, how do we pay these guys properly? And he knew we'd found a solution ourselves, and asked if we could help him on that matter. Then I had a couple of friends from the US again that were working with talent in the region, and wondered how they could be making sure they were paying those people properly. So first off, we were helping ourselves with Native Teams, and then we were able to provide that service to others. And I think really that's when the penny dropped and made me think, well, look, this is a problem we've got. It's a problem that other people in our peer group have. Let's really build a business behind this. Perhaps to come on to a little bit later in the conversation as well, but it was a problem and a solution that really resonated with us. I mean, not least because it's such a tangible thing. My previous startup was creating software for online video payments, which was great, but the satisfaction that we can get from helping talent work on some of the best opportunities in the world compared to helping somebody pay $10 to watch a wrestling match or whatever is an order of magnitude different. So that's the original founding story.
All right, and I think that's a good intro towards, if you can tell us a bit more what's Native Teams actually doing. So what's the solution that you're bringing to the world?
Yeah, no, absolutely. So in a nutshell, Native Teams is It's a multi-currency wallet, so it has all the flexibility of a multi-currency wallet. We have a number of tools to make it easier for our users to have the remuneration, have the payments for their work come into that wallet. We allow them to raise invoices from the wallet. We allow them to send payment requests. We give them an IBAN, so they get money into that wallet. But the absolute unique feature is we allow payouts through the payroll system in a country where they are tax residents. So let's imagine we're I don't know, a Romanian software developer working for a company in the US. We allow that software developer to issue an invoice from the platform, or if they know the person well, to just give them their bank details. That money comes into the native team's wallet and then gets paid out through the payroll system in this particular example in Romania, making sure that taxes are paid, social contributions are made, any pension contributions are made as well. So it really takes all of the complication away from the freelancer, from the employee side of things. But more importantly, it really allows them to continue working on some of those really great opportunities for the longer term. Something that we've tended to see the users perhaps considering as an option before native teams, where that they could do freelancing and working for international opportunities for a shorter period of time. But actually, at some point, they would think, well, look, I've got to get a proper job for a local company so that I can be contributing to my pensions and making the social contributions, because, you know, obviously people get older, they need to be thinking about their future as well. And what we allow them to do is to have all of the flexibility and freedom to work on often better paid international opportunities, but also kind of keeping things straight at home and giving them all the benefits of working for a local employer, as it were, under a local employment contract. So in summary, that's what we do. It's that multi-currency wallet, a number of ways to get money into that wallet from international clients, and then payouts through the payroll system is a real secret sauce.
And how does it work from a legal standpoint? Like, what's the legal, infrastructure that you guys need in order for this to happen?
Yeah, that's taken quite a lot of investment, to be honest with you. So whilst being founded in Macedonia, my business partner and co-founder Alex is Macedonian. We're a British headquartered company, so we have a British parent company, and then we have entities in 70 plus countries. So we have the company that can do the local employment on the ground in those different countries. We then have a tripartite agreement that covers most of our relationships. So we will have a relationship with the employer or with a client that a freelancer or an employee is working with, and then we can extend either a full-time contracts agreement or a local employment contract with the employee, with the remote worker in country, and essentially we're able to pay them out through the entity in the country where they're tax resident, to give them all of the benefits, as I say, of a local employment or of being locally employed, but with the kind of international opportunities to work on the best projects for the most exciting employees, wherever those people and opportunities might be in the world.
And can you tell us also a bit about how the business model of the company works, and how are you guys making money at the end of the day?
Yeah, from our side, it's really pretty simple, actually. So when we started the business and we incorporated in May 2020, because we wanted to make this really scalable, it wasn't until July 2021 that we launched to the wider world, as it were, not just those friends and friends of friends that I mentioned. Once we launched, initially we had a little bit more complexity. We allowed our employer clients the ability to try and find people through the platform, but we very quickly dropped that to really just focus on essentially providing the plumbing behind the scenes. So we only work in a situation where an employer or a client has a freelancer or an employee that they want to work with or they're already working with. And we then essentially provide the contractuals and the payment rails to make sure that those people get paid properly. And for that, we charge a simple per seat per month fee. So it's 90% recurring revenues that we have. We do add a layer of FX commission and some transactional revenues on top of that as well. But the vast majority comes on a per seat per month basis. And obviously, these are really long-term relationships as well. There, we find that the average duration of a account with us is a little bit longer than your typical average employment period. So really nice long time periods that people are paying us that per seat per month fee. We have a couple of different tiers as well. When we launched, we were working a lot with the employee side of the equation, who are often a little bit more price sensitive. And we were working in perhaps some countries with lower average salaries, such as Macedonia. And we wanted to make sure that we set our cost base right, but also our pricing plans correctly to be able to bring on that business. But actually, as the business has grown, we have clients and employees sitting in 70 different countries, and we wanted to make sure that we have a pricing tier that can really ratchet up as the incomes that people are earning increase as well. So our plans range from, for the most basic plan, which doesn't include a local employment contract, it's 19 euros, and it goes right up to around about 350 euros per person per month for all of the bells and whistles for those highest earning users as well.
And can you give it a bit of insights of how your customer split look like, and what are the typical businesses that are using native teams, and also how does the average contract value look like for native teams?
Yeah, that's a really good story actually for us, and in terms of a sort of a positive view for the business. So first off, when we started, we were dealing more directly with the employees themselves. And whilst we're still happy to deal with employees, unlike the employee side of the equation, and what I mean by that is that initially, particularly, we would have international remote workers that had perhaps got a long-standing relationship with a client overseas, but just wanted to have a way to formalize that, as I say, to kind of access all of the benefits of local employment as well, the creditworthiness, etc. Often those were on slightly lower salaries, and therefore the ACV was a little bit lower for those users. The average, the lifetime value was a little bit lower. And really, over time, we've started to bring on board many more B2B deals, as we would call them. So the deals we do directly with the employers themselves, to such an extent that now the deals and the paid seats that are paid for by the employer account for around about 70% of our user base and the paid seats. Those are really interesting deals. First off, they're much more expansionary. So obviously, when we were doing deals directly with the employees, increasingly, we could only ever sell one seat to those employees. However, when we're working with the employers, often they will on board with us with perhaps 5 or 6 seats, and then that will expand quite progressively over time. So in a typical month, around about a third or so of our new business comes from selling more seats to those existing users. The average revenue per seat as well has also gone up quite a bit over time, for a couple of reasons. So first off, the more we do deals with the employer side of things, they tend to be paying now their employees more than a freelancer might earn. So the average earnings we earn from one of those users, because they're often on a higher tier, has increased quite a bit. And then, as I say, when we're doing those employer deals, there's more seats that we're paying for being paid for each month. So the average revenue per account also increases. Currently, as of today, our typical ARPU is 106 euros per seat per month. That's across the breadth of those lower earning users and the higher earning users. And just for ease of accounting, we do put a 3-year life expectancy on those users. So an ARPU of around about 3,500 euros or a little bit more. Sorry, an LTV of around about 3,500 euros or a bit more. But to be honest with you, our churn rates are much, much lower than that. So we would actually tend to see a much greater lifetime value, particularly from the B2B users.
And can you also tell us a bit about the geographical split and how your customer base is evolving?
Yeah, so we started in the Western Balkans. As I mentioned, my business partner is Macedonian. We launched in Macedonia, and that was July 2021. I think in September we also launched then in Serbia properly. Really, we've expanded from there. So we're now in 70 or just over 70 countries. It's really an interesting journey on that side of things. So the longer we're in a country, the greater the penetration we have, the higher the sort of on a per capita basis, the user base. Having said that, obviously our initial countries, Serbia, Croatia, Macedonia, pretty small countries. So we do now have several countries where we have a much larger user base than those particularly small ones. Having said that, we do still have a really good penetration in those countries, and we expect to see in some of our bigger countries us getting to the same per capita penetration as we have in those smaller Western Balkan countries. having said that, and whilst growth has been pretty consistent across Europe, from the beginning of this year, we started to look more east. So we took on a country director in India at the beginning of this year. And India is really very fast growing for us, alongside the Philippines as well. We could have done India perhaps a little bit earlier. It's a perfect market for us. It has a lot of those attributes, a high, a very large amount, and proportionally a very large amount as well, of tech sector and remote workers, which is really what we need to have a country fly for us. However, we thought, look, this is possibly going to be too much for us to chew to start with. It potentially was going to be a fire hose of new business, and so it's proven. But we wanted to leave it a few years until we started in India, because we just didn't think we'd be able to cope with it. We now have around about 20 or so of our own colleagues in India, and we're really closing much more business now than ever before. Our expectation by the end of the year is to have around about 30% of our paid seats as Asian-based seats rather than European seats.
And can you also share a bit around, the trajectory basically of the company, and in terms of traction, in terms of, and how was that also correlated to your fundraising history? You guys started 3 years ago. It was a fast pace, I assume, but what were the inflection points that you perceived as the founders that took the company from the levels that it took?
Yeah, no, that's a really nice question. So whilst we launched in May 2020, we took a seed round of investment from 11 Ventures. It was led by 11 Ventures, sorry, with a couple of other participants in June 2022. So we'd already had probably 9 months or so of trading under our belts before we did our first proper raise. And that was great, because that meant we knew how we would deploy that capital when we had it, and it came at the right juncture for us. I think that was a definite inflection point for us, really, for a couple of reasons. First off, it brought some expertise. It brought the expertise of some well-proven local investors, but I'd say local investors with very much an international and global perspective. So that was super helpful, and that perhaps allowed myself and my co-founder Alex just to take a little bit of a step back in terms of our thinking and think about stuff a bit more strategically. Obviously, it put a bit more fuel in the tank as well when it came to hiring and really doing what we wanted to do from a delivery perspective. And I would say, really, between that period and the beginning of this year, so second half of 2022 and all of 2023, really that was a case of just continuing to grow. We expanded our geographic footprint quite a bit. We grew our team quite a lot as well, and learning quite a bit as we went along that way. I think towards the end of 2023, we had another inflection point, and that was we took on another group of more senior leaders within the business. Krasimir, our CFO, I believe, is on the call. Nico, our CRO, as well, and a few other top level management team and leadership team members. And that was great, because that really allowed us to supplement the enthusiasm and experience that our existing team were gaining on the job with a little bit more expertise coming in from outside. So that, I think, allowed us to level up. Really, during the course of this year, and I would say particularly probably the last 3 to 4 months, I think we've had another major inflection point in the hiring process recently. I've described it a little bit, not so much as a new chapter, but if we will Lord of the Rings, it's like we'd finished the first book and we were starting the second. And that's really, I think, as we move from perhaps the startup stage to an earlier stage scale up, if you will. And I think the drivers for that and the most important things are, first off, we've got a really good handle on our data. So we've done a much better job of measuring the data that really drives the business. So we know pretty much to the exact cent and the exact time period. If we spend €1 on B2B marketing, let's say, we know what the payback period is going to be. If we spend €1 on B2C marketing, we know the same. We know what the return on that investment is going to be, the LTV, and that's given us a ton more confidence to really invest in the marketing efforts. We also, and as importantly, to be honest with you, we know what do we need, what are the other blockers? Because to be frank, for us, the market opportunity is not a blocker. We could spend 10 times what we're spending today without really seeing a noticeable increase in CAC. However, we need to have the rest of the team in place to be able to deal with that. So we now know that if we're going to be closing a certain amount of new business, we have to have, you know, the right amount of salespeople to be able to do that. If we've got the right amount of salespeople and we're closing that new business, we have to have the right operational capacity and productivity to be able to provide the service quality that we want to have to our users as well. So I think that's been a real inflection point, because it's allowed us to start to develop much more accurate assumptions as to yeah, from a budgeting perspective, and also to have a much better understanding of what we need to get right to make that happen. So yeah, I think there's been probably 3 or so really significant inflection points so far within the lifespan of the business.
And what are the things that, you know, excite you looking forward?
I'd say there's probably 2 bigger areas, if not 3, that are really exciting for us. So on the one hand, I'd say it's this next evolution of the organizational structure. So we've just begun now, starting with our growth team, to slightly tweak our org structure to accommodate better for absolute global expansion. So whilst we're present in 70 countries, I'd say that our management and our leadership to date has been more focused on Europe. What we're looking to do is to replicate at least some of the operational management, not so much the leadership, that will probably remain in Europe, but to replicate some of our operational management expertise initially in India and for the Asian markets, and then during the course of next year, we'll do the same for the American markets. That's really important, and that's certainly seeing that structure emerge, to be honest with you, a little bit organically to start with, and now increasingly intentionally, to see that structure emerge that will take us where we want to go from an ambition perspective is great. I think secondly, we have a much clearer understanding of our points of differentiation compared to any competitors, and also where we want the product to go. So we have a strategy we're just beginning to roll out, which will allow us to tap into more enterprise businesses. We currently focus more on the SME sector. So that's something quite exciting. And also we call it native money. It's a little bit of a wealth management type proposition, really to help our employee users. And whilst I mentioned that only 30% of our seats are paid for by the employees compared to the employers, this would be applicable to those seats that are paid for by the employers as well. And the purpose of this is to help our employee users retain more of the money that they're paid for the work that they do, and then also to do more with it. We have a number of partners that can help offer interest-bearing accounts, a degree of investment opportunity as well. So that, along with the continued education we're doing for users who are often in perhaps slightly less sophisticated countries when it comes to financial tools, to help them do more with their money. It's really interesting because a lot of our users are amongst the better paid people in the countries where they're based as well. So we're in a really good position. You know, we kind of own the top of funnel, if you will. We're the place where their salaries are paid, so we can help them do more with that. So that's really exciting as well. I think just the final thing, we have a couple of additional exciting new hires, and we're looking to bring on board a new COO and a couple of other roles, to be frank, roles that we didn't even need before: a VP of brand marketing and overall SVP of marketing to help run our very competent heads of demand gen marketing and product marketing, but just adding a couple more layers of leadership as we go along. Excited by that as well, Eric.
All right. And can you, for people that are not very familiar with the landscape, how would you position, native teams in the competitive landscape in the industry? What are the USPs as a product and as a company?
Yeah. So I would always describe that we sort of sit very much between 2 directly or indirectly competitive groups. So on the one hand, there's what you might call the EOR providers, companies such as Deal and Remote, Papaya Global. There's a number of providers in that space, and they've been an absolute success story over the course of the last 4 or 5 years. And then there's the generalist payments platform, so Payoneer, Revolut, Wise, etc. Now, we never want to be a generalist payments platform, but excuse me, if you look at the native teams product, that kind of multi-currency wallet approach, it does look not dissimilar to some of those generous payments platforms. So, I'd say there's a little bit of crossover there, although that's not really a space that we ever want to play into. We have this absolute laser focus, on payments for work and how we can make those payments for work as remunerative and and optimized as possible. In terms of how we set ourselves apart, so compared to the generous payments platforms, and very simply, we set ourselves apart because we allow payouts through the payroll system. Absolutely unique in that space and highly valuable because it allows a user to get so many of the kind of intangible benefits from the work payments that they're getting, not just the kind of the cash in the bank, as it were. If you look at what we're doing compared to the EOR providers, first off, a ton of flexibility and transparency. So building our product around a multi-currency wallet as we have, it allows users to have a much better sense of flow of funds, of how that money is being dispersed, rather than just being a payroll processor as such. Also, it gives a lot more flexibility both for employers and employees alike in terms of how they get paid and then what they want to do with the money. I think the transparency we have in terms of seeing how a user's money comes into that multi-currency wallet, it allows us to, again, uniquely review those transactions and then help our users perhaps automate access to tax-free allowances, spend some of that money on more tax-efficient employee benefits, rather than just getting paid out through the payroll system. So I think the flexibility we bring to bear is a real USP compared to those other EOR providers. And I think the final point is an absolute focus on the employee side of things as well. So whilst I mentioned that 70% of our paid seats are paid for by the employer, by having such a focus on the employees, first and foremost, it means we get next to no churn because we really look after the employee. Secondly, it allows us to go to the employees and say, look, if you're considering using another EOR provider in this space, to be frank, we can probably do most of what they're doing a little bit better than they can do because we've got boots on the ground. But even more important, we will look after your employees better than anybody else can do. And that really resonates particularly with the more progressive employers. So I think that focus on the employees is absolutely unique as well, and really sets us up well for the future.
Thank you so much for this. Can we dive deeper a bit into the financials and also fundraising aspects of it? So you guys are now planning to raise a Series A. Give us a bit of insight, please, about how do you feel the company is positioned now, towards the Series A? What are the prospects of that Series A, and what are the objectives and hypotheses that need to be taken with this round?
Yeah, sure. So we're very well positioned. So just fundamental financials, as you mentioned at the start of the call, we're a little bit above 10 million euros ARR now. Our what you might call our GMV figure, the amount of revenues that go through the business, is around about 17 or so times that as well. So we're really, we have a lot of activity going on. That positions us really well from a Series A perspective. We are, I think if you look at a Series A world where a lot of those Series A deals are getting done, where there's perhaps ARR between 3 and 5 million, we're way ahead of that now. We've also had really consistent growth. So yes, we've been lucky enough to have very good growth, but it's been consistent, not just kind of in fits and starts. Last year we grew just over 3 times. This year we will grow 3 times. Next year we expect to grow around about 2.7 times. Back in 2022, I mean, because we were much smaller, that was even an order of magnitude bigger. But we've had consistent growth, which we know what those levers are, and I think that is a really good story to be able to not even a story, to be able to tell investors, a good set of data to be able to show investors. So I think that sets us up really well. We're perhaps a little bit more advanced when it comes to the team as well, compared to lots of companies that we're going to Series A. So we have pretty much a fully fleshed out leadership team. I mean, to Frank, it is fully fleshed out. It's just because we have such strong ambitions, we do want to add a couple more hires to really help us scale on a more global basis. But the key team is already in place, which obviously is very important. And I think if I look at where we are now compared to where we were 6 months ago, we have a really very clear direction in terms of where we're taking the product. We're already seeing success in most of those areas where we're taking the product. And I think fundamentally, and again, this is something which, whilst it perhaps might not be the number one priority for investors, it's certainly very important. And that is that we have an addressable market bigger than pretty much anything else. So if you think about what we're focused on, we're focused on payments for work. And really, that means anybody that's getting paid for work. And to be honest with you, that means locally employed people as well as internationally employed people. We have some of our functionality, the automating of access to tax-free allowances and what have you, is as relevant to a local employee as one with an international component to their employment. So really, we have that relevance in every one of the countries where we are, for everybody that's getting paid for the work that they do. Now, of course, we're not trying to boil the ocean. We're doing this one vertical and one geography almost at a time. But it does give us just an absolutely huge opportunity, yeah, if we get it right, and to allow us to kind of keep growing for many, many, many years to come.
And can you also tell us a bit more about, profitability is on people's minds, and then runway and burn rate and all these, uncomfortable topics have become top of mind for a lot of investors. So
Yeah.
where does native team sit on, on this topic of financial, robustness, so to speak?
Yeah. So it's a good point. I mean, to be honest, I think we're lucky enough to not have it as a particularly uncomfortable topic in our case. We're not profitable, but we're pretty close to cash flow positive. We're burning around about 175k euros per month. It varies a little bit, but thereabouts. And that's the level that we're happy with. We've raised just under 9.5 million euros so far. And really, we have been very capital efficient. I mean, if you compare our metrics, what we've raised to where we've got the business to, from an ARR perspective, we have been really capital efficient along that journey. And that's something that we continue to look to do. Our colleagues are located in many cases in perhaps slightly lower cost countries. That's where a lot of our users are. And actually, even though it's kind of a happy story that it makes it a more capital efficient business to run, it actually means we've got people in the right place to operate the business that we need to operate as well. So in terms of runway, as things stand at the moment, it's not really something we have to be overly concerned with. It's sort of 12 months plus. Having said that, and one might think, well, look, why do you want to raise a Series A? Really, we want to make sure we can capitalize on this ambition that we have for the business. One of the things I've learned along my career so far is that you can have the best idea in the world, you can have a brilliant team and a brilliant product, but to be completely blunt, you have to be in the right place at the right time. And absolutely, certainly, I absolutely consider this to be a once in a lifetime opportunity for me, and to be frank, for most of my team members, even the younger ones, we are in the right place at the right time. So we have a really great opportunity ahead of us, and I want to make sure that we have a strong enough balance sheet, enough cash in the bank to really take those opportunities as they might come along. As I say, we have bold ambitions for the growth of the business next year, and we want to make sure we have that kind of magnitude of ambition for the years to come as well. So that's why we want to raise around at this particular point in time.
All right, thank you so much, Jack. So, as a closing point of today's session, what are the three main things that someone should remember native teams by?
I say we got product market fit, and we've had that for some time, and we really have consistently grown. So every month, by definition, every month we grow, but really for the last 6 months, every month has been a record month when it comes to new growth as well. I think, without sounding arrogant, meaning to sound arrogant, at least we know what we're doing. And I say that, because I look at where we were 6 months ago, and I know we know a ton more than we did back then. We know enough of what we're doing now to really have that consistent growth and to know what the levers for growth are. Having said that, I'm sure in 6 months' time we'll know a ton more than we know today, Eric. But we really have a much clearer sense of where we are and where we're going. I think the final one, because you only limited me to 3, otherwise I could have gone on, but the final one I'd say is it's just a huge opportunity. It's a huge market opportunity. And we really see that. The longer we're in a country, the greater the market opportunity for us. If we take a country like Croatia, where we've been for one of our longest ones, we're already having success selling to local employers there as well. So yeah, the longer we're in a country, the greater the market opportunity. And to be frank, at the moment at least, the quicker the growth.
All right. Well, thank you so much, Jack, for taking the time and walking us through a bit, the story of native teams and the exciting prospects that are coming towards the company. I want to remind investors, so the investment opportunity will go live on SeedBlink for our elite investors starting this afternoon, and for the wider range of investors starting with tomorrow morning. If there are any questions on native teams or the growth of the company, the people with the Jack's team have been nothing but responsive so far in preparing the documentation, and a lot of the questions that may appear already hopefully already answered. And again, I want to thank everyone for taking the time on today's call, and congratulations, Jack, for what an amazing business you've built so far.
Thanks, Eric.
Thank you, everyone.
Thank you. Have a good day.